the Chinese started trading, most of the time gold prices and silver prices went up. And it's because the Shanghai Gold Exchange is physical trading. It's not like in the West where you have a lot of unallocated gold, or even at the COMEX, just huge paper gold positions. And China has been, not a secret, trying to bring as much gold and silver into the country as possible. They kind of have also cornered the gold and silver markets. Chinese love to gift gold for New Year's. Okay, so that means they will buy more gold, but not on the Shanghai Gold Exchange, which then contributes to the worldwide pricing levels. So many people in the West expecting next week that gold and silver will crash. And as we all know, that usually is not happening when everybody's aware of it. Usually the market is always trying to find a way to surprise as many people as possible.
China's expanding influence in precious metals markets is reshaping global price dynamics. As trading activity increases on the Shanghai Gold Exchange, physical demand continues to support higher gold and silver prices. Unlike Western futures markets such as COMEX, where large paper positions dominate, China emphasizes physical settlement. Strong cultural demand, especially around Lunar New Year gifting, adds further upward pressure. While many Western investors anticipate a price crash, markets often move against consensus expectations. According to precious metals analyst Florian Grummes, China's steady accumulation strategy could trigger the next significant breakout in gold and silver prices. Now, we present the clips from Florian Grummes' interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Holiday in China next week, New Year in China, and so there is no official physical trading. Shanghai Gold Exchange will be closed, as far as I know and understand, and hence that always gives the opportunity to the paper shenanigans in the West to basically sell off whatever paper products they have to push prices lower. There is certainly the potential that we might get another leg lower. But as I said, I mean, so far gold is holding up well. For me, it was important to see that it still maintains eye contact or in touch with this around $5,000 level, because you always have to understand that it's not only a psychological thing that people need to get used to these new higher price levels. It's also just that if you are a trader, if you're a hedger, it's like the higher the price goes, the more the numbers change and the quantity change, and people need to get adapted to that new environment. And that takes a while. I have no extreme bearish indication here at the moment. As long as we hold above 4,400 and ideally already above 4,650, that second higher low a week ago, I think it's all looking good, and we can expect a sideways consolidation on high levels here for a few weeks. That's probably the most likely outcome. I mean, look, silver had a historic rally since end of October, right? Broke above this long-term historical resistance at $50, then ran up to $54 end of October, and then pulled back hard. I think it came down $9 to 45 and something ish. And that was end of October. And since then, I think 28th of October, silver started this unprecedented, really wonderful rally. It went up from 45 to 122 in 3 months. I mean, that's massive, unheard of, crazy rally. And that's the typical character of silver, right? Like once it finally shows up, it shows up violent, overtakes gold and leaves everything behind itself. So that's what we exactly have seen now over the last three and a half months. And the problem is once silver shows up to the party and then goes nuts, which it did, it usually brings a breather, a pause, a break, or even a larger correction within the PM space, right? And so what we have seen now over the last 2 weeks, massive pullback in silver. Silver came down from $122 to $64 within a week. That means it gave back 43%. I mean, it's unprecedented. Wow. It's wild, yeah. And I think most of the viewers on your channel will agree that it was most likely also engineered to help some of the banks who were short. We don't really have all the details and the proofs of on the table, but it is the whole thing, how it played out. The LBMA was closed. Margins were raised like crazy. I mean, there was a lot of things happening that are rather questionable and certainly helped to trigger that massive sell-off. But of course, at the same time, silver became extremely overbought. It was very much ahead of itself. So when we spoke in mid of January, it was still trading at 85. The top came in 2 or 3 weeks later at 122, massive run up. So it was normal that at some point it would take a hit. Of course, once you are in that euphoric up leg, nobody would imagine seeing silver pulling back 43% in 7 days. It did. And that's where we are right now. So 64 was the low so far. It became pretty oversold. I had a nice bounce back up to 85-ish yesterday, and then came back below 80 and is trading currently around 77.50. So I'm a bit not cautious, but I would say I'm extra patient now with silver. I think we have to assume that this will take a while to digest this crazy roller coaster here and to sort out things. As far as I see, the physical demand from Asia and China and India is still very strong. Premiums started to rise again in Shanghai the last few days. So let's see how next week with China being away is playing out, and then I would reassess. Maybe we have seen this low in silver as well. I assume that for now, gold is taking the lead again, and silver is just following, so I wouldn't expect too much from silver for a while. This needs time to basically calm down and digest this crazy move. But in the bigger picture, everything is still in place. My worst case here for silver is we get a pullback and test that breakout, which would mean 50 to 55-ish maybe, exactly there in this range. That probably is the worst case. So far, the 50-day moving average has more or less held up the correction. So I think below, let's say, $70, I would definitely buy more physical silver. Right here now at 77, I would just be waiting and observing. In the big picture, everything is intact, but this was a big, large move, a crazy rally, then a huge pullback. I think that needs a bit of time to digest. And I wouldn't be surprised to see gold outperforming silver going forward the next few weeks and months, maybe.
Gold and silver markets are navigating a volatile period as the China holiday shuts down the Shanghai Gold Exchange next week. Physical trading pauses in China create opportunities for Western paper markets to push prices lower, though gold has held key levels near $5,000. Silver's historic rally from $45 to $122 in 3 months has corrected sharply, retracing 43%, reflecting both overbought conditions and potential market manipulation. Analyst Florian Grummes notes that strong physical demand in Asia and India continues, suggesting gold may outperform silver in the coming weeks, while silver consolidation could stabilize around $70, $85. Let's get back to the interview.
If silver, if gold turns around now and maybe needs another few days and weeks to digest and consolidate around 5,000 and then starts to move towards 6,000, silver will follow. And then at some point, traders and investors will say, okay, gold is at 6,000, new all-time highs, silver is lagging, it should catch up. And then at some point it will. But as we know, and as you have seen over the last 2.5 years, most of the time we have been discussing, where is silver? Why is it lagging so much? And then suddenly it shows up violently. And most of the time that kind of behavior. If you want to look at the gold-silver ratio, for example, you can see that this trend started basically here at the COVID crash back in March 2020, exactly. So there was this peak in the gold-silver ratio around 125-ish, I would say. And you can see you have this nice downtrend channel here. Silver came down during that so-called silver squeeze run in February 2021. The ratio came down, I think, to 80, 65-ish, something like this, and then recovered. And last year, April, it was back up above 100 and then had this violent move. And you can see how strongly silver outperformed gold most of the last year, basically into January this year. And now it clearly bounced within that channel from the lower boundary. Yeah, probably this ratio goes back to maybe 80, 85-ish over the next few weeks and months. So that would confirm my thesis that silver probably will underperform for a while. And then going forward, the next 1, 2, 3 years, this channel should stay intact, meaning the trend is still favoring overall silver outperforming gold. And then at some point, there will be much more space on the downside here. And we will see a gold silver ratio at 30, at 10, maybe maybe single digit. That's my big picture assessment. I would say going forward the next few weeks, I would not expect too much from silver other than following gold probably. I think the worst is probably all the speculation that came into silver is probably out of the market now. I don't think that any leveraged trader has survived that pullback. And it's probably getting back to like the physical supply and demand situation driven by China and India. Yeah, I think that the silver miners are probably pretty interesting already. As you rightly pointed out, they have been drastically underperforming against the silver metals price. And now that the market is basically working on getting used to these new price levels, I think the stocks so far have acted as if they don't trust these new, and I think this is going to change. And I think we're going to hear a lot of good numbers and coming out of the sector going forward, simply because the big producers have made a killing at gold prices between $4,500 and $5,500, right? So they all swimming in cash, so to speak. And I think the miners have still a lot to catch up. And I think still, even though we had a big rally in silver already, and it might take a while for silver, I think the mining stocks, the smaller gold and silver mining stocks, are probably very interesting because they have still lagged, and I think they have still a lot of upside. And we haven't seen any M&A, like really aggressive M&A activity in the sector yet. Yes, we have seen a few takeovers, but not like really aggressive moves, which I remember from the last bull market. So I think there's still a lot to come. Many of the big producers have to reinvest the money that they're making now and refill their reserves and resources. And so I think going forward, it will be very interesting. And as you rightly pointed out, I mean, the stocks didn't crash as much as especially silver did.
Gold's consolidation around $5,000 could set the stage for a move towards $6,000, with silver likely following, though lagging initially. Analyst Florian Grummes highlights that silver historically shows violent catch-ups after periods of underperformance, as reflected in the gold-silver ratio since March 2020. Over the next few weeks, silver may underperform gold while the market absorbs recent volatility, returning focus to physical demand from China and India. Meanwhile, silver and gold mining stocks remain undervalued. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.